Hi friends, thank you so much for clicking on this video. My name is Rachel. Today we have a very exciting video. So come drive with me as I talk about one of my favorite subjects in the whole world, dividend investing. So one of my YouTube friends asked if I could teach him how to invest in dividend stocks. So I decided to make a video about this. Perhaps there is someone else wondering about how to get started. This video is for my friend as well as you. But before we get started, I would just like to say thank you to everyone that has liked and commented on my videos and subscribed to my channel, particularly everyone you see on the screen here that left a comment on my last video. Thank you so much, guys. We're on our way to 500 subscribers, so please hit that subscribe button before you leave and help us get there. We'll be having another giveaway once we hit 500 subscribers, so please hit it now. Thank you. So without further ado, let's get into today's video. Firstly, what are dividends? So simply put, a dividend is a portion of a company's profits that are paid regularly to its shareholders for holding that stock. So let's say you have 5 shares of RBC, for instance. They pay you a certain amount of their profits for the year because you have those 5 shares. Okay? So basically, there are two types of single stocks that you can invest your money in. We have the growth stock and the dividend stock. Mind you, a stock simply means a piece of a company that gives you ownership of that company. So for a growth stock, they usually reinvest most, if not all, of their profits back into their business. And that usually translates to faster share price appreciation. Usually, that's not a given, but that's what usually happens because they're able to get better technology, hire better hands, generally just reinvest into their company to make it better and make it grow even faster. But the thing about growth companies is that if you invest your money in growth companies, it's great, but you really don't get any benefit from owning that company until you sell a stock and then you realize again. While a dividend stock will pay you an amount of money periodically, some pay monthly, others pay quarterly. But at this point, I need to let you know that no company is obligated to pay you a dividend. So you can't sue them if they stop paying a dividend. They can cut their dividend without prior notice. So you need to be aware of that. You can't just invest in a company just because of the dividend yield. That can go away very quickly. So how do you get started with dividend investing, you might ask? For a fresh investor, I would say do as much research as you can because hopefully you're doing this for the long haul, like 20, 30, 40 years. So you want to know the companies that you're putting your money in for this time period. You just don't want to put your money in a company that's going to go under the next year, right? So I would suggest that you start by investing in ETFs. An ETF is an exchange traded fund. These funds are like big baskets of stocks of different companies. And this is one area where the phrase don't put all your eggs in one basket does not apply. Because in this case, you can actually put all your money in one basket and you'll be fine because these baskets are already very diversified. So take for instance a VOO. This ETF contains the top 500 companies in the United States. Or let's say a VTI. This one contains all the companies that trade publicly in the US stock market. So putting your money in any of these means you own a tiny piece of each of these companies that are in those baskets, right? So putting all your money in them would put you at a good place because you're not investing in just one company with all your money, right? So once you're done with this first phase and you've gotten your feet a little bit wet, you can now decide to invest in individual companies. You can simply go on Yahoo Finance and look into the holdings of each of these companies and find the companies to research. There's a reason why these companies were selected to be among the companies in these giant ETFs, right? So you can rest assured that the top companies that you find in these ETFs would be a good place to start. But if you're specifically looking for dividend stocks to invest in, you can simply go on Google and type in the best dividend stocks in Canada, the best dividend stocks in the US, or you can even say dividend aristocrats or dividend kings. These dividend aristocrats are companies that not only paid out dividend consistently for many years, but they have also increased their dividend payouts periodically. You can at least go to sleep knowing that you're in safe hands. These companies have had a good track record over many years. So with that, you get a long list of dividend companies, and you can now start narrowing down your list. So the first step in narrowing down your list, I would say, is to take out any company that you don't understand what the company is about. Companies that you probably check on Yahoo Finance, go to their profile, and you just can't figure out what the company is about. Just take those ones out. There's no point investing in something that you don't know or you're not willing to learn about. So just take those ones out first of all, and then you can move on. Hopefully, you have a shorter list by this time. So about a year ago, my husband and I embarked on a little experiment. We wanted to see which portfolio would perform better in a single stocks portfolio and an ETF portfolio. So in my portfolio, we bought mainly single stocks, and in my husband's portfolio, we bought mainly ETFs. I know a year is probably not enough to come to a concrete conclusion, but that is all the time we're willing to spare. So 1 year, and that was it. So at the end of the day, we figured that our single stock portfolio outshined the other portfolio. So yesterday, we sold off most of our ETFs and we used the money to buy single stocks in my husband's portfolio. That's in our second account. So let's now head over to my computer. And from there, I'll show you how to further narrow down that long list that you have there. So let's say we do something here and we type in best dividend stocks in Canada. I'll just do best dividend stocks in Canada. Let's say we're starting afresh and we just want to get that list. Just want to get that list going for us. So it gives us all of these stocks. It gives us Bank of Nova Scotia, CIBC, Enbridge, BCE, and all of that. So let's just take one, for instance. I'll start with CIBC. Then we'll go to Yahoo Finance. So I open a different tab. And I go to Yahoo Finance. I just want to show you my thought pattern when I'm trying to narrow down my long list so that you can probably modify that and use that too. So go to Yahoo Finance here. And we're starting with CIBC, right? So I know that the ticker symbol for CIBC is CM. So I choose the CM.TO because that's Toronto. So I click on that. So once it loads, the first thing that I want to check is the price of the stock itself. So right now I see that CIBC is trading for $62.19. And I check this because I want to diversify my portfolio, right? I don't want to, if like for instance, I have just $50 to, invest in a month. I'm not going to go for a stock that is so expensive. That means I'm only going to be able to invest in just one company, right? So, but for us, this price point is not bad. So I can move on with this one, $62, not too bad. I don't want to get anything too expensive. If I'm saying $300, $500, I'm just going to move away from it. Although if you really want it, you can still go for it and buy fractional shares. But for us, that is one thing we always look at. How expensive is the stock itself? So for this one, it's fine. Then the next thing we look at is the market cap, which is right here. So personally, we only go for companies that have their market caps in billions. Market cap is market capitalization, and this shows the company's size. I don't want to go for any small, cheap company, so I would go for a company that has its market cap in billions. So this one has ticked that box there for me. Then the next thing that I also want to check is the company's price to earning ratio. You find that right here, price to earning ratio. And this is just a common way to value a stock. The lower the price to earning ratio as compared to the other companies in the same sector, the better. This means that the company has like a good growth potential. I don't want to see anything over 20 here. So for a 9.31, I'm very pleased with that. The fact that we want dividends doesn't mean that we want a company that will remain stagnant year over year. Then the next thing that I want to check here is the dividend yield. Yes, I know that we don't want to chase yields and just be going for companies that are paying high yield because that can be dangerous. But we also do want good yield, right? This is the company's total dividend payout per share held. So I know that for CIBC, it tells me it pays 5.51%. What we are looking for is just 2.5% at least. So a company that pays us 5.5, that definitely checks off the box for us there. And lastly, what we also look for is the payout ratio. We like to see a company that does not pay out its total profits to its shareholders as dividend. We like to see that they keep some of that profit to grow their business, which will potentially lead to even more money for us in the future, right? So a company that pays, let's say, 80% or less as the payout ratio is considered good in our book. Although we bend on this one, so this is not a deal breaker for us, but ideally we would like to see that the company doesn't pay more than 80%. Because really, if you think about it, if a company is paying over 100% of its profit out to its shareholders, that means it's paying out even more than it is making, which is not sustainable. But there are some companies in like telecommunication sector, the energy sector, and the utility sectors. These companies usually do this, and they tend to be able to support these high payouts in the long run with their huge cash flow. So it's not particularly a deal breaker for us. And you can find that here if you come to statistics. Just scroll down. Statistics has like so many figures for you. You can go through everything if you like, but the only thing that I come here to check is their payout ratio here. And for CIBC, it's telling me that the payout ratio for CIBC is 48.95, which is really good. So it's telling me that this company keeps even more for itself, for growth, for bettering their technology, hiring more capable hands and all of that. So I can imagine that this company has a good growth potential. Earlier, I just typed in dividend, best dividend stocks in Canada. So you can also say the best dividend ETFs in Canada. And you can put in US, in UK, and or anywhere that you live, it will still bring you up a list there. So I'm just trying to find who has that list for us here. So it gives you a list of dividends paying companies right there. So you can also just pick one. I already know one off the top of my head, which is VDY. So let's also go back to Yahoo Finance because if you look into the dividend paying stocks in an actual ETF, then you know that you can't go wrong with those ones because these ETFs are managed by very top companies that are watching these companies like a hawk. They're checking their balance sheet, they're checking, everything about the company, their debt to income ratio, all of that. So they've done most of the work for you. So for VDY now, it says it's a Canadian High Dividend Yield Index ETF, right? This is how much it's going for, but that's not why we're here. All we're looking for is the holdings. So once you click on holdings there, just scroll down and it gives you the individual stocks here. So you can start with this one and then pick the individual stocks and look through all of them. So let's just do a quick one. Let's take this first one here, which is RBC. Like I mentioned earlier, the first thing that I want to check is how much this stock is being sold for. Check to see if you can afford this or if you are okay with buying a fractional share, that's fine too. Check the market cap. Is it in billions? Is it a big chip company? You can go with that. Check the price to earning ratio. Is it less than 20? This is 12, so that's great. Check the dividend yield. Is it at least 2.5? Or you can set your own metrics, guys. Don't always go with what I am saying. I'm just a girl on the internet, right? Do your own research. But this is what I look at. So for me, 2.5 is my minimum, and this is 3.8. That's great. And lastly, I want to check the payout ratio. Payout ratio is 44.85. So what I have found, honestly, is that most banks and financial companies, their payout ratios are usually very low. Let's take, for instance, let's go back to the VDY and check that list. Let's check for one utility company. Let's take Enbridge, for instance. Enbridge is not a utility company, it's an energy company, but it's still in that class that I was talking about of companies that pay more than 100% in their payout ratio, but let's take a look. So I look at this one, the price is just perfect for me. I take a look at the market cap is in billion. I'm fine with that. I also look at the price to earning ratio is 20.20. So just a little bit more than what I like, but that's not a deal breaker. 20.20 is not bad. And then take a look at the yield, guys, 6.5%. I am very pleased with that. When you take a look at the statistics, let's just take a look at statistics. You see what I'm talking about here. The payout ratio, can you see? 126%. That is huge. But I'm not very scared for this one because I know that is what energy companies usually do, and their cash flow can usually support this kind of payout. So I'm not worried about this one at all. So that's it, guys. If you enjoyed this video, please give it a thumbs up. If you learned something new, please subscribe and leave a comment in the comment section. I really appreciate every single one of you guys, all the likes and all the comments. So thank you for watching and have a great day. God bless.